Hey guys, welcome back to the channel. I really appreciate you clicking on this video and giving me a valuable time. I'll try to provide as much value as I possibly can through this video. I really want to thank each one of you who subscribed. We've gotten to 900 subscribers and I really hope we can, continue to grow the family and keep on providing more value. So we'll talk about the 4 stocks that we already talked about on this channel so far. Each one of them have done really well. I'm actually blown away. I think it's mostly the market. We've gotten lucky with our timing with most of these. And I was going to talk about another stock that I was preparing a deep dive on. While I was in the process of doing that, Goldman Sachs upgraded the stock and it's no longer like that enticing anymore at this price point. So I'm just going to talk about it briefly. If you're actually interested in the detailed thesis, leave a comment. I will make a video on it. But just the risk reward at this point is not that favorable. I'm going to talk about it briefly and I'm going to go through my tweet that I had put out last week and why I like the stock and what I saw happening over the next 6 months. So yeah, if you haven't subscribed to me or followed me on X, please do that because I do share my upgraded my updated thesis on things. If I find something very interesting, I'll share it over there. Sometimes more speculative plays. Sometimes if I have a play, like I'm taking profits and everything else. So I'm going to talk about the 4 companies that we talked about. Sezzle, we'll talk about CELH, we'll talk about DBO.TO, and we'll talk about MFI. CELH has done almost 30%, DBO.TO has done almost 40%, Sezzle 50%, MFI has almost doubled. I took some profits. I'll tell you how and how much I've taken profits on, and where I would re-enter those positions if I had to. And then the last stock is Hasbro, which I'll talk about as well, and why I like the company and how I see them doing over the next 6 months. So first of all, Sezzle. Now, we looked at the data last time. We were saying that we expect the GMV to come in at around 330 to 340 million. I still maintain that. I think it might be a little higher, but I'd rather be on the conservative side. And the trend was still accelerating going into Q3. So I won't be surprised again, that I talked about, if we do get to $5 of EPS next year, and the stock is trading at, I think it was trading at 170 today. I took some profits at around 176 yesterday. I sold 30% of my position. I'm still holding to the rest of my position. I'll probably be considering to add back at a certain point. I'm not sure yet what that level is going to be. I'll wait for the the first week or second week of data for July to see how that's trending, and then based on that, I'll make a decision if I want to get in or not. But right now, if you're saying $170, as I said last time around as well, and we are doing $5 in EPS, we get to about 34 times PE, which still is not 34 times earnings, which still is not that expensive. The website traffic again is still going up. The Android data is also going up, and the iOS app also going up. There's been some regulatory tailwinds actually for them, where people are talking about your BNPL history, your prepayment on BNPL will actually build your credit score. So Sezzle, as we talked about in the previous video, I'll link it up right now. Their whole moat, or their whole value proposition is around this, that they provide the users with this this method of building credit score and everything else. So Sezzle is the primary beneficiary from this regulatory tailwind. So we could, as I said, and interest rates going down would be super beneficial to them as well. And I mean, their monetization is way better than Affirm or any other players in the market. There's another company that I bought a little bit shares in. It's called Zip. It's also another BNPL company as well. I sold that position yesterday a little bit as well. I haven't sold in my entirety of my position, but I sold 30% of that as well, just taking profits. Just risk reward perspective, from here on, it could, again, as I said, in my last video, I could see it doubling. And right now, maybe at that point, some people might have been like, what is this guy saying? Now it seems more realistic, right? Because we've already gone up 50%. So at this point, 50% more will put us to, a double. So it's very possible still. I feel like this stock could double from here. Not double from here, but at least go up 50-60% from here. And that's not really, something that is outside the realms of possibility. So if the data continues to look good, there's a good chance that this keeps on going. I try to reach out to a couple of analysts who cover the stock and didn't get any responses back. Affirm has about 16 analysts, and Sezzle only has 4. So we can see analysts coming in, initiating their coverage after buying the stock and just keep moving the stock up as well. And I do see that possibly playing out over the next 2 months, and then when the earnings come out, if they raise guidance, if the momentum is still there, then we can see the stock re-rate higher even, and who knows, it might be a $300 stock in 2 months. So that's still on the table. I'm gonna sell like a little bit, I guess. I have some levels that I will be selling at. Maybe I'll sell a couple at $200, just a psychological level, right? And and then we'll keep the rest of the position. So I'm already out 30% of my position. I might be adding back based on the data, and we'll go from there. So yeah, that's my thoughts there. For Alani, so like I talked about this. Now this was really nice to see, because what happened was there's an analyst from TD Cowen. He actually upgraded the stock, and this was his thesis around why he was upgrading the stock. So this might sound familiar to you, because we talked about the same exact thing and why we like the stock so much, right? Like we talked about, so I'll just go through this real quick. TD Cowen upgraded CELH to buy and raised its price target to $55. They see the stock doing really well this year, and they don't see it coming down. No, someone said that. I don't want to like toot my horn too much, but this was a pretty high conviction position, and it is playing out really well. So we believe the stock will continue to trade higher this year. Analysts wrote in the note, adding that recent trends indicate that CELH's brand is returning to growth. TD Cowen said CELH's scanner sales have improved to flat from negative sales decline seen in February. So this is what we talked about. We'll see CELH's going flat. Comps will get easier, and then the most important part here was, on Alani New, TD Cowen stated that the brand transitions to CELH in a strong condition, with scanner sales up over 100%. So that's what I told you. I expect the Alani sales to come in at $230 to $240 million. The momentum is unreal. They also talked about Live Fit Go. We also talked about that in the second video that we did on this. So it was kind of nice to see. And then they talk about cannibalization. We also talked about this as well, and they don't see too much cannibalization happening. We talked about that. They talked about Pepsi, that there's a possibility for the distribution to go up, potential distribution changes around that, and I talked about that as well. I wouldn't want this to happen for Alani, and I don't think I might disagree with. I disagree with the analyst here. I think it'll be hard to see how or why the CELH management will go the route again that they did with CELH. Basically, what they did was they sold a bunch of product to Pepsi, because Pepsi owned 8.5% of the company. They gave a lot of supply to Pepsi, and then Pepsi just expanded the distribution a lot. They bought a lot to start with, and then they didn't see the sell through as much. They didn't have proper strategies in place to make sure the sell through was strong, and that didn't happen. And then CELH has been struggling ever since, because they flooded the market with too much supply and not enough demand, and they had to discount and everything else, and it's just left a sour taste in their mouth. So I don't see that happening for Alani. I think the management is not going to do that. So I think this still looks strong. I did take almost 30% off for this position as well. My initial target in that video, I told you, is going to be $45 to $50. I took some profits at around $47. I'm holding the rest of my position. I'll be adding to my position back at around $38, $40. Just some technical levels. I actively trade around my portfolios, so my style might be different from yours. I do understand if you don't really want to sell and you just want to keep buy and hold, which also makes sense. I mean, everyone to each their own. So the search trends are still looking pretty decent. There is some decline here, so people who don't know much about the company, we talked about it last time as well. I'll leave the link now to the deep dive, the initial one that we did, and I would highly recommend watching the second one as well, which we did after the CELH management talked about the modeling and how things are going to be for Alani going forward. So this decline, I wouldn't be too concerned about it. I go every week to this store that I talked to you about. There's a 7-Eleven close by as well, and they are also seeing distribution, and the product sells really well there. Others are heavily discounted. Alani generally isn't. The decline here in search trends is mostly due to the LTO phasing out. So we talked about limited time offerings, how Alani has flavors that they come up with, and they're only there for like a couple of weeks, 3 weeks in the market, and then they just go away. So the cotton candy flavor, like we talked about in the second video, did really well. The search trends spiked, and since then they've come down a little bit because the LTO has gone away. There'll be another LTO potentially in July or August. We don't know yet. The management will probably say that in the earnings call, and that's going to drive up search trends again, hopefully. And then last year as well. So what they did was, which was really smart, was in December last year. So this spike over here, and this was the initial spike where Alani started to do really well. Was they did a couple of flavors during Christmas time and during holiday season time. And energy drinks during winters don't do as well, right? Because people prefer warm drinks. But these LTOs, even during these, like as you see over here, like December, like the last quarter of 2024, energy drinks generally don't do so well in Q4. People like hot coffee and like espresso and everything else. So for them to do this, where they they launch an LTO during the part of the year where they're not where they're not going to do so well seasonally, they just launch these LTOs, and those LTOs end up doing really well. So that's something they'll probably do again in the second half of the year, and they'll continue to have this strong demand for the product, and they can actually corner the feminine energy drink market, which is growing quite substantially as well. And given the fact that energy drink prices have come down quite a bit as compared to last year, energy drinks are seeing robust growth. I know the BTIG analyst said that the analyst or the energy drink market is supposed to grow 10% this year and 5% next year. So we'll see that, and then also the fact that they are low sugar as well. That also helps them. I'm seeing Monster discounting a lot in like different channels for wherever I've seen like energy drinks at like like convenience stores or even like grocery stores and everything. So I'm not sure what the reason behind that is. Is they're just trying to corner the market, gain more share and increase prices? But I feel like if they increase prices afterwards, the customers are more likely to switch to Celsius or Alani, just because the taste profile is better. The consumer is over here, at least in the energy sector, they're very price sensitive. So I see them, if Monster doesn't have too much pricing power, I don't think. If they increase prices, I think they'll see a lot of people switching to different brands, or just I think people, once they're addicted to energy drinks, they don't go away too much. But the tastes of the energy drinks are mostly quite similar. I know people have preferences for a certain taste, but I think Monster, Celsius, and Alani are pretty substitutable. So I could see that happening as well. So I think they'll continue to do well. I could still see this to be a $60, $70, $80 stock, as I said, possibly $100 stock if we do see some kick from Celsius. And then again, like Alani is such a machine. If Alani growth continues, analysts are going to be very excited about Alani alone. And I mean, to say that this company can reach $20 billion market cap, I'm not really concerned about that. And the protein shakes continue to do well as well. And this is the Celsius trends. So they're saying the Celsius scanner data has started to flatline. The search trends are also flatlining. So this is YOY growth, and we're seeing that this is flat, right? So like the search trends are kind of corresponding, and they're kind of coming back. So if the Live Fit Go campaign, which I haven't seen much about social in terms of social buzz on on TikTok and anything, so that I think there's still more to be desired from Celsius brand. But that was not part of our thesis anyways, right? Our thesis was Alani, and now Alani can make this a $60, $70 stock. And if Celsius does come back eventually, we are looking at $90 or $100. So that's still possible. Let's get to $60 first, I guess, and then see what Celsius is doing, and maybe we'll get to $100. So yeah, and then D-Box, my conviction on the stock has actually gotten, like it has gone up now. So the reason why I am so excited about the stock, more excited about the stock, I have quadrupled my position this week. The reason for that was because of the F1 movie. So this was my tweet about the F1 movie. I actually went and watched it on D-Box, and it was an amazing experience. To be completely honest, I was a little underwhelmed. I would say I would give it like a 7.5 out of 8 experience. Would I go again? I probably would. Yes, I would probably go. I generally don't go watch movies, but I'd probably go for something in D-Box again. So this was my tweet about D-Box the other day. I had bought shares actually when I tweeted this out on June 27th. I had just quadrupled my position. I'm not sure if my tweet caught someone's eye or something, but the stock actually went up almost 30% right after I tweeted this on the same day, and the volume was 10 times of what generally trades in the stock. So this stock trades about 300,000 shares on the Venture Exchange every day, on the Toronto Venture Exchange, and that day after the tweet, the volume actually spiked up to 3 million. So I'm not sure if my tweet was the reason why this someone actually ended up buying it and the stock moved, but if it did, I'm happy. And I did quadruple down my positions, and I might actually increase my position as well. So let's talk about why I like it again so much. And there's a couple more things I'm going to talk about. I've already done 2 videos about it. I'll link my previous videos as well in the description. You can go check it out. So DBO is going to have a massive quarter in Q3. IMO went to Cinemark website and tried to gauge the demand for the D-Box seats in Canada, and noticed a clear pattern. You'll see how the seats for the D-Box are almost sold out in each of these theaters, even in ones with smaller cities. The usual seats might be empty, but the D-Box ones are almost sold out. D-Box is a premium experience which is differentiated, as it cannot be replicated or streamed at home. Hollywood is moving from quantity to quality, and premiumization of the movie. Should be movies. That's That's a bad typo. Movie going experience, which is perfect for D-Box. Not to mention the sim racing business could also benefit from the success of the movie. So these were some theaters that I was pulling the information for. So these are D-Box seats. You'll see all of these are sold out. The normal ones are, pretty much available. These are 4 different theaters. These were D-Box seats. In this theater, only one available for that night, for the opening night. And obviously, F1 has done $144 million in the first weekend, which is one of the best ones so far this year. These seats, again, D-Box, only one left in the corner. And then this one's a very small city as well at 3:30 p.m. Almost all seats sold out. We just had a few that were, still available. So this, this movie is made for D-Box, and I think this will not only help this part of the business, but will also help the F1 arcade part of the business. So this was the D-Box trends. As you see, they're starting to kind of spike up a little bit. Jurassic Park is coming out as well, and there's a couple other really good movies like Superman that should help them as well. And then this is the sim racing. Now see, after the movies coming out, the sim racing business is starting to spike as well. So the sim racing segment basically sells the product to F1 Arcade. Now F1 Arcade only has 5 locations right now, 3 in the States and 2 in UK, and they are going to get to 30 locations in the next 2 years. And D-Box is the only supplier for these sims to F1. So this business, which only has 5 locations, is going to go up to 30 locations in 2 years. And also, the other thing to note is the F1 Arcade has done some optimization of their locations, and they're going to go from 30 to 50 sims to 70 sims per location. So you have a possibility of 25 more locations. 25 times 50, you're looking at 1250 simulators that they're going to sell. And then that, just pushes the business itself, as I said last time as well. And then again, install base leads to more royalty, right? So if the install base goes up, there's royalties from this business as well, and that will explode as well. So I think this company, as I said, 2 to 3x in my initial video, I still feel like that's very possible. We can have a stock that's trading at $150-200 million in next 2 years, and very possibly they get bought out. I feel like there's a high likelihood that F1 buys them out, because it makes so much sense for them to do it. And like just the F1 as well. So I had made another tweet about this. So this is just insider buys from the management. So the insiders seem to agree with us that they also think the stock is undervalued. So that's nice to see. The other thing that I tweeted about was about the Apple executives talking about how this will drive the price up, or like how this will drive the viewership up for F1, and that's going to lead to more sim racing demand. That's going to lead to the arcade business doing well as well, right? So this is what I think this portion is really well. They talk about like before the movie, before watching the movie, 18% of the people have watched an F1 race, but at the end, almost everyone says that they will definitely watch a race. So I think this just increases the possibility for people to know what D-Box does, and how far they can go. And obviously, like, Formula One is another beneficiary from this whole this whole movie and everything else around it. But like, Formula One is a $30-40 billion market cap company, whereas DBO is only $60 million, right? So $60 million versus almost $30 billion. So you'll see that like for DBO, a couple million, $3 million in revenue from the royalties portion alone, that's just pure profit, is basically double the profit that they did in Q4. So I think there's a high likelihood that Q2 and Q3 are really good for D-Box, and this stock is trading way higher. Would I buy here at 34-35 cents? I probably would not, just because just the way I trade, my system doesn't allow me to trade something at this point. Would I buy more if the stock drops? For sure. I think I was not able to buy as much as I wanted to. I had to convert some USD into Canadian. I had to go for a meeting at my job, came back, and the stock was already up, so I wasn't able to get my entries that I wanted to. I still did quadruple my position since the last video, and I would have wanted to add more, but it's fine. It's just the way it works, right? Can't be crying about spoiled milk, I guess, at this point. And the last stock that I'm going to talk about is Hasbro. So this was my initial tweet on June 23rd about Hasbro, so that you guys know that I'm not really just making things up. I actually talked about this. So my thesis on Hasbro was pretty simple. I said I don't think many people realize that they own Magic the Gathering. So Magic the Gathering is a TCG game. And MTG trends are exploding. The Final Fantasy crossover sold out fast and is seeing unprecedented demand, with secondary pricing moving through the roof. The pricing of this set is 27% higher on average and could lead to margin expansion in Q2 and Q3. Upcoming AAA games like the new D&D, Dungeons and Dragons RPG, and G.I. Joe Adventure Transformers Reactivate, plus a Saber Interactive title are on deck. Also important to note that Netflix Magic animated series would be released this year, which would lead to even better sales going into 2026. So this was the search trends. As you see, they're exploding. MTG Cards is up significantly in July. Buy MTG Cards is up. Magic TCG is also up. So they were seeing some robust growth. I wanted to get into it. So my thesis around this company was basically, so Magic makes up more than 100% of their profits, or like Wizards. So Wizards is a segment that owns Magic, and then there's a couple other Dungeons and Dragons and a couple other tabletop games that are part of that segment, and that segment is more than 100% of their profits. So the toy business and a couple other smaller segments are loss making, whereas Wizards Magic is the profit making engine of this company with almost 50% operating margins. So any increase here, any inflection in the Magic business or the Wizards business is going to lead to a re-rating for the stock. That was my thesis around this company. And so that was the reason why I like the company so much. This morning, Goldman Sachs basically upgraded the stock. The stock went up. This stock for me was not something that was going to go up 40-50%, in 3-4 months. That would have been the ideal scenario for me for sure. But like this for me was more like my NetEase thesis. So I wrote a piece about NetEase a couple of months ago where I talked about NetEase and why I think it's a good stock to own. The reason for that one was because Marvel Rivals had come out, and I said that even if Marvel Rivals leads to 5% revenue growth, this company has been no growth for so many years. A 5% or 10% revenue growth from Marvel Rivals and a couple other AAA games that were coming out at that point will lead to the stock going up 30%. And I mean, again, I think I just got lucky with that one too, because the stock actually did go up 30% since I wrote about it. So that's what I was thinking about Hasbro as well. I was like, I don't see this this specific segment to like double over year. I do expect it to the management said 15%. I said my models suggested 25 to 30% growth, and that would have led to huge earnings expansion. Then there's what's the name of the show that's coming out? Stranger Things, and whenever Stranger Things comes out, Dungeons and Dragons does well. Magic the Gathering had a Netflix series coming out as well, which should have also helped them. Then the games coming out as well, the AAA games, and they're doing the game with the same developer for Warhammer or Space Marine, and that game did really well. I think sold about 3 million copies. So they have a really good developing developer contacts as well, and they're spending a lot of money on that side. So this business went from a toy business to more of an IP and licensing business, and that was my thesis around it. So Goldman Sachs basically upgraded the stock this morning. They said they upgraded it to buy from neutral and raise the price target. The brokerage said demand for new Universe Beyond releases of Magic the Gathering should help tabletop and digital gaming division. Goldman also expects the traditional toy segment. They talked about that. Hasbro's brands include these. So they basically talked about the same thing, that they expect the Magic and Gathering to do well, and they expect the revenues and profits to go up from there, and that could lead to a re-rating. And they increased the target to by 21%. So when I had initially tweeted about the stock, it was at $69. It has gone up almost 15% in the last 7-8 days. I was not going to buy shares in this one. I was just in options. I had bought a few contracts. I sold half of my position this morning just because I think it's moved up quite quickly, and those options were up almost 55% in a very short period of time. So I decided to take profits. This also means that there's some sort of information parity that analysts already know about this. So that kind of left me thinking that maybe there's no point anymore, because if the street knows about something, I liked it because I thought I had an edge, but it seems like they already know about this, so it's already probably priced in to some extent. So that was the reason why I sold 50% of my position. I'll probably add back again at like $70, $72, something like that. So I think $73 is a very crucial level, which I'd be very happy to add back to. So right now I am waiting for that position. I still do have some some options that I'm holding. The reason being there's a Spider-Man release that's coming out. I talked to a few shop owners and they've been saying that Magic is picking up. We can see that in search trends as well. I talked to a guy who plays Magic and he's like super into it, and he also was saying the interest is starting to pick up a little bit after some stagnation. So I think like this will continue to do well. The player base is expanding, the pricing has increased, which should also lead to higher margins. There is a royalty portion to this business where they license. In this case, they would have licensed, the Final Fantasy team. They would have licensed the cards to them, and they would have to pay a higher royalty. So the increase in prices is because of that as well, to some extent. But like they'll probably have increased the prices like by 27%, 28%. They probably will realize a little bit more in income. And this business does well in economic downturns and everything, so it's very robust, and they pay out almost all of their earnings as well. I think the payout ratio is like 90% or something like that. So very good company, and they move quite quickly, faster than I would have liked to. If you want a deep dive on it, I can do a video. I spent a considerable amount of time. I was going to do this video on that, but I don't see the point anymore. But if you want that, do let me know. I can make that video. So thanks so much if you're still watching after 25 minutes. I really appreciate you guys. I really do. So yeah, thanks so much for watching. Please subscribe. Please share if possible. Please comment as well. And yeah, I'll see you in the next one. Take care. Bye.